we did a phenomenal episode, already over 300,000 views, and the comments have been demanding that we see a Chart Fanatics episode with this phenomenal guest.
This is the basis of every chart. To me, when I see charts, this is all I see over and over. And if you focus on this, that concept of follow the trend, it becomes easier and you can actually kind of see it. Now, what usually happens is
after achieving a high of 320% in the Futures World Trading Championships, the world's second best futures trader reveals her exact strategy.
It is going to blow your mind that this is so simple and looks so stupid, yet it can almost nail the bottom, like exactly. And I use the Bollinger Bands to help me kind of realize how close we are to reality.
What time frame would you say this is based on?
So you can do this on any time frame, but I will say I like it better on the...
Marcy Silfrain goes step by step through her exact process that allows her to identify market tops and market bottoms.
This is how I judge if a trend is intact. If it keeps forming these little rizzies and it keeps going down and it keeps hitting these points downwards, this happens over and over and over. And I believe it is the basis for all of the charts. What happens is,
not only does Marcy share her exact strategy that allowed her to achieve world-class results, she also gives 2 major predictions on this very episode using her strategy. This is an episode you cannot afford to miss.
I think this is what's going to take over as the next Berkshire Hathaway in our generation. And if you invested in Berkshire Hathaway in the beginning, you would have made like 5 million%. Now, what I see when I look at this is...
Welcome everyone back to Chart Fanatics, the go-to channel for all of the very best strategy and concept breakdowns in the world with some of the greatest traders in the world as well. Talking of which, we did a phenomenal episode, only came out a couple weeks ago actually, already over 300,000 views, and the comments have been demanding that we see a Chart Fanatics episode with this phenomenal guest. Placed second last year in the World Championships of Futures Trading. You already know who it is, the one and only Marcy Silfrain.
Hello, I'm glad to be here.
It's an absolute pleasure. I know we've kind of dragged you back in the studio so in short notice, I guess.
Listen, I have tried to fight off everyone because everyone wants me to teach trading. And you actually initially asked me to come on Chart Fanatics, and I turned you down, and I was like, I can't do that. And then my messages online all day are like, teach trading, teach trading. I'm like, I can't. And on Words of Wisdom, what did I say?
Yeah.
I was like, I'm not a good teacher. Here we are, eating your words, teaching. So I'm just saying, like, you guys have been fair warned, you know. Mm-hmm. You get what you get here.
But what you said, though, before we started is today we're going to go through the concept you use to predict the market bottoms.
Yes.
And you've done that already, you know, through examples that might be on screen right now or shown before in the trailer. Of 2 occasions in particular, we did that too. One on the day and one like a day before.
Yes.
And we have chart examples later of predictions that you have for Bitcoin and another chart.
Yes.
In particular, but we're going to start here on the whiteboard. Where do you think is best to begin here?
Well, first I want to say I have sort of a philosophy on charts and markets, and that I think that all these different tools we use to buy and sell and enter trades, I think they're all telling us the same thing. Whether you're doing order flow for your entries, or you're doing Fibonacci retracements, or you're doing trend lines. Like, I watched the video you have with Fabio, and then I watched the one with Tory Trades. And the way I look at it is they're doing the same thing, even though they're very different. And one is a little bit more complicated, you could say. In my mind, and the way I approach charts, we're all doing the same thing, which is we're trying to figure out the ratio of buyers and sellers at any given time. We just all do it a little bit differently. So this is very much sort of a dumb it down, easy, simple way to ask yourself, like, which way is the trend going? When could it possibly bottom? And I find it's very useful to find the bottoms during market crashes. And this is what I use to predict bottoms and market crashes. And like I said, I was able to use it in 2025. I called it to the day on X. And in 2022, I had posted it on Instagram. I had predicted it like 2 weeks prior. And I predicted it in QQQ. I was using QQQ to chart back then. And I was off by $1 in a day. in QQQ. And it's very simple. It's something I feel like elementary school students could do. And I think it's a reminder that sometimes we overcomplicate things in life and in trading.
Especially in trading.
Yeah.
Well, that's the key word that we love to hear here. Simple.
Yeah.
I'm sure the audience feels the exact same way. And it's going to be super interesting, especially given the markets this month. We're recording this at the end of January, the last day of January. So hopefully we'll see what the coming months have in store for us. And I'm excited because I think, especially with the chart section we do later, by the time this comes out, we might have actually seen where this is, where those charts have gone to as well.
Yeah. And I will say when I draw it, I'm going to be drawing it sort of like in a downtrend, but you have to also remember the inverse pattern works
Is the exact same
in an
the other way.
uptrend. Yeah. And I mean, we can try to do some uptrend ones. I think it's just the easier concept to get in a downtrend. And remember, when you ask yourself, why is this pattern so simple and so powerful? What it really is in my view, is it's based on Fibonacci and all the retracements, and it's just kind of seeing all the retracements at once without actually drawing them. Okay, so that's where I would think in my head where it came from. But so it is. These are my candles. Ooh, is my lotion gonna mess that up?
No, don't.
Okay. We're gonna get some red candles. Oh, we're going down. We're going down big. Get a doji. Okay. Let's do one more big one. Oh, they're getting killed here. I hope you were short. I hope you went short. Okay. Now we all see this over and over. And then look what happens. Have you ever seen a candle like that? Don't you feel like Silver had one of these?
Yeah, exactly. I was about to say,
This might be Silver.
There'll be some traumatized people.
We're making it dramatic so I don't have to draw 20 on the way down. Okay. So what happens here? Let me add a few over here too, just so we have this like choom. How are my candle skills?
No, they're great. Most people just draw lines, so I'm sure the audience will appreciate the effort.
Okay. Let's pretend this candle is not here, okay? And all we have is the price data up until this point, okay? What you want to do is you want to come in and draw a trend line, right? Right here, down. And what you will find, there's a name for this, okay? I have self-taught myself all of trading. So a lot of these like specific names and everything, I don't even know what they are. So truly, I don't know what you would call this. But, I was thinking to myself, there's a trader whose name we shall not say. Okay. Isn't he known for renaming patterns?
Oh, yeah.
And so we're going to rename this. And I was thinking we're going to name it after your kids. So we're going to call this pattern a Little Rizzy. Okay. So from now on, this is known as a Little Rizzy. So whatever, they're going to leave me comments and say, hey, it's called this. I don't care. It's called Little Rizzies.
I'll back you up.
Okay.
Well, yeah.
You'll back me up, right? So what this is right here is a Little Rizzy. Okay. And the way that I look at this, and you will see this over and over in the charts, if you find the low on the candle that had the lowest low in this pattern, and you measure from right here to the top of the trend line, so you want to go directly up this same candle, right?
Okay.
To right here. And you measure the price distance. Let's say this is $20. What you will find is the next move down will be this distance. So like this would even continue further down.
Gotcha.
And this happens over and over and over. And I believe it is the basis for all of the charts. And what happens is when you're trying to identify a trend, you're going to see these keep forming. So I would view this as a new Little Rizzy that formed, okay? draw a trend line from here to here. Technically, I would have wanted this one to come a little bit lower. Let's just say it came down here, okay?
Yeah.
And what you're going to do is, this is how I judge if a trend is intact. If it keeps forming these little rizzies and it keeps going down and it keeps hitting these points downwards, and what you will find is I like to add like Bollinger Bands to it too. So for people that don't, that aren't like familiar with Bollinger Bands, I'm gonna like, let's just, okay, we're gonna pretend these are our Bollinger Bands. For people that aren't familiar with Bollinger Bands, because I know kind of the new traders these days don't use them. Again, we're going to like dumb it down here. I like to call it reality. Okay. So the middle line is like reality to me. If it's trading near the middle line, the price is like in reality. If it's up here, it's it's getting out of reality. If it trades above here, you're out of reality. So if you're out of reality, what happens? You have to come back down into it. So same thing here. If the price is trading near the bottom line, you're getting close to out of reality. When you come down here, like you're just out, you're gone. You're out of reality. At some point, mean reversion or coming back to reality has to take place. So when I use these little rizzies, I like when the first one happens towards the top of the Bollinger Bollinger Band, like up here or above reality when it's going down.
Yeah. So for the flip side, it would just be at the bottom side.
Right. So it will keep forming these, and you will find it. And when I pull up the charts and I want to go through 1929, we're going to go through 2000, we're going to go through 2008, we're going to go through 2022, we're going to go through 2020, we're going to go through 2025. It is going to blow your mind that this is so simple and looks so stupid, yet it can almost nail the bottom like exactly. It freaks me out still, like how accurate it is and easy to understand. But I mean, if you're looking at this, you can kind of tell this is kind of like you can kind of see, you're familiar with retracements? Like, like you can kind of see it's really a Fibonacci retracement. So that's where the power in it is coming from. But they will just continue on. And as I was saying before, I really like when they're if it's going downwards, I really like when it's towards the top of the Bollinger Band or the middle. And as the trend is fading, eventually it's going to start forming one towards the bottom that's not going to finish. But what usually happens is...
So as you were mentioning, you mark out the bottom of that particular...
The lowest, whatever candle has the lowest
and
low.
it's above there where you're trying to measure.
You draw the trend line and you take the exact point in the trend line
so be the
on that
from
candle.
Here to here. And so in this example, we said $20, let's say.
Right.
So then what you would be expecting is a $20 move below this area.
Below the low.
Based on that.
Yes.
Perfect. And for this example, I know it was already drawn on, but in this case, taking that same principle, would it be from this low to this high then?
No. Well, we're saying we're going to pretend this one came down lower.
Oh, just one more candle, yeah.
We're going to pretend this is another little rizzy that just formed.
Oh, I got you. So you get the lowest point.
The lowest point.
Gotcha.
Now, sometimes the lowest point is the first candle.
Yeah.
Sometimes it's the last.
So this one might have gapped down and then...
Right. So we have to look at it, and we'll go over some charts, but you would measure it, and then you would measure this distance, and that's how much it would go
extension
down. And so that's... And when it gets in these patterns, it keeps falling. That's how I like to gauge, okay, which way is the trend going? Now, on the flip side, if you start getting closes above this trend line, Lil Rizzy broke.
Yeah.
Not your friend anymore. Well, they're always our friend, but you know what I mean?
Yeah.
It broke. So it's not always going to work, but that would be your cue for, hey, this is not working. And I do tend to notice the first one or two that form on like a downtrend work the best. Yeah. The fourth one, the fifth one, the market's getting tired now and it's ready for a bounce.
So once we start to get more out of reality towards those edges, those ranges are going to get smaller and start to fade away.
Right. And I use the Bollinger Bands to help me kind of realize how close we are to reality, how far out of reality we are.
What time frame would you say this is based on?
So you can do this on any time frame, but I will say I like it better on the longer time frames. This is how I do think with trading, it's really important to establish a overall trend for the market. Like, like the daily SPX is in an uptrend. So this is something that I would use for that. But there are times where I see these little Rizzies on like a 5-minute chart, a 10-minute chart, a 30-minute chart, and I'll take it. And my cue is when we start dropping, right? We never go straight down. There's always a bounce, right? We start dropping, I sit, I wait for the bounce. And when the bounce comes, I see if it's forming a trend line down, right? And if it does, then I'm like, we might be forming a little Rizzy. And so I might go short here.
Yeah.
And what I would be playing is, this $20 below here.
Yeah.
And that would be my exit point for a profit, or my stop would be maybe somewhere up here where that trend line was broken if we go to close up here.
To establish the trend line, do you wait for price to start to come down first and then you mark it out?
So to establish the trend line, I wait for the initial drop and the bounce. And from there, I just start trying to draw a trend line. And it's not always going to be right. You could come early, right? You could have came here. See, the thing is, you want to ask yourself, this is what I would say. When the chart has its initial drop, it's up here out of reality in the Bollinger Band, and it has its initial drop, and you're waiting for the bounce.
Trading education is completely broken. For years, the industry has been purged and poisoned by bad actors, fake results, and strategies hidden behind paywalls. But in every industry, every once in a while becomes a catalyst, a moment in time for change. Now imagine a world where elite trading education was entirely free. Education with no hidden agenda, verified trading results, and real profitable strategies, all for free. Welcome to Chart Academy. Chart Academy is the world's first all-in-one platform for trading education. Chart Academy is free. No catch, no upsells, no strings attached. World-class trading education, completely free.
Hi, my name's Randy Howell, and welcome to my Chart Academy Masterclass.
This is completely revolutionary. The biggest change in trader education in 20 years.
My name is Carmine Rosado. I'm a verified 7-figure trader. I've been trading for 10 years now.
The reason why a lot of traders fail is because they...
Ultimately, this work is about self-mastery.
Trading education will never be the same again.
Browse hundreds of hours of content in Forex, futures, stock, options, and crypto from the best verified traders on the planet, all in one platform. Experience a completely personalized trading plan tailored to you and your goals. Reach milestones, redeem points, and earn rewards with a massive global community. Whether you trade Forex, futures, stock, options, or crypto, Chart Academy has something for you. Join the waitlist now and be part of a movement that is going to change trading education forever.
In actuality, hopefully you'll have a few candles up here that you could kind of get an idea where a trend line might be. And then when it starts to bounce, if you had this idea that you had these candles here and this was your trend line, you would say, hey, this one hasn't reached it yet.
Yeah.
No, not yesterday. On Thursday on X, I actually applied this on a 5-minute chart. And I tweeted it on purpose so we could talk about it here too.
Oh,
we
really?
have time. And it was the same thing. It was a little Rizzy. And I told everyone, the market, watch out, it's going to turn here. And then it did start to turn. And then I set a price that I thought it was going to run to. And it was all based on this. And it ended up doing it. And it hit the price. And it's so simple. But you really have to, and we'll do it when we pull out the charts, you really have to look at the charts, and you have to kind of train yourself to see them over and over and realize they're constantly repeating. And I think we've all just learned so many complicated ways to trading. So sometimes you got to kind of step back. And I think that's kind of what this is. So it might be hard for some people, but I think for like new traders, they would love this.
Definitely.
And again, for identifying entry points on crashes, it is like so accurate. It's crazy.
Well, that's the beauty, because obviously you can use it from a trading perspective, but then
Yeah.
equally from just a long-term investing perspective, it can help two ways, whether you're looking to get good buys, right? Or just being able to hold your long-term portfolio without too much stress, knowing that, okay, on average, this is the sort of area and benchmark we should be looking at for the pullback to start to slow down or stop and turn around.
Yeah.
In terms of your Bollinger Bands, do you have any particular settings that you use for that?
I just use the 2 standard deviation.
Gotcha.
Yeah. I think most of them default to that.
I think so, yeah.
Yeah, I don't extend them, but they are really helpful in kind of determining if the price is in reality or not.
Yeah, no, it makes sense. Like, you know how people use the RSI, for example?
Yeah.
Overbought, oversold. Obviously, the Bollinger Bands are similar in nature, but are working off the price itself rather than, say, a sentiment gauge. It's working off, as you say, the range. So the 2 standard deviations, as you said, is just expanding that range out. So once you go beyond that, the upper limit, lower limit, then like you say, it's out of reality at that point. So like silver, for example, and gold would have been way out of reality when they started to turn. But then, that's, a lot of people, I think, were not arguing, but loads of people were trying to time the short because they knew it was getting out of reality. And other people would try to kind of put them down of like, it's bullish. Why are you fighting the trend and taking these losses? Because some of them are taking losses on the way up and they were getting a bit frustrated. But then a lot of people had like career high trades because they stuck it out and realized, look, we are our reality regardless. So this short is going to happen. And when it does, once you're seeing like mass greed or mass fear, but mass greed in that case, that short, when it does happen, is going to be very aggressive. And look what happened. It was crazy aggressive. And, it's probably not going to be the end. I'm sure there'll be a lot more volatility when it comes to those pairs, but it's a great example because I'm sure, no doubt, a lot of them probably were using, whether it's the exact same tools, but this, as you said, the same sentiment, of what we're trying to derive anyway, regardless of your strategy, it's all the same principles we're trying to extract. Where are, as you said, the ratio of buyers or sellers? Yeah, and I can see perfectly, clearly of why this would work and how you're deriving that information from what you've covered so far.
Okay, we're going to show one like on the way up. Don't my sound effects. This is a mixed candle bar. You know what I mean? Okay. Let's just say that blah blah blah. Guys, don't judge me on my bars, okay? All right. This would be a little risky. I would consider on going on a uptrend. So it went down. I like brutalize these. Okay, whatever. What I would do here is measure the distance from here to here. And this would tell me, hey, this thing went down. Then we got a little bounce. It pulled back a little bit. And the height it's going to go on the next move is from the high to the point on the trend line. And that's where you're going to find the next move goes to.
Exactly. So we'll take it from here down.
Yes.
And then essentially that would be the same to here.
Yes.
Which then when you're looking at it, is it a case where you're saying, okay, from here, this price movement makes sense to reach the upper sort of Bollinger Band in this case?
Yeah.
And
Okay,
this makes sense for me to be able to hold. Is it a case, let's say if that was larger and it's showing you that it'll probably get up here. When it comes to say managing your trade, especially I imagine in a long perspective, or maybe a short one might make more sense. But would you then say, okay, once we're starting to reach the upper band, that's where I'll start to scale out? Or
No.
No?
If the Lil Rizzy, right, had the distance, let's say the high was here, and let's say the trend line was here, right?
Okay.
And let's say it brought us
Much
the
bigger,
next
yeah.
move. I would play the whole move, even if it brought me out of reality, because they're that powerful that they usually tend to finish. And again, they're really just based on Fibonacci retracements. And I mean, you can look at these moves from like an order flow perspective. If someone pulled that up, they'd probably say that there would be like short orders, a bunch of people, you know, and they coming in here trying to go short, and they would want to come in and play this move, or people coming in here in order flow trying to buy upward. So it's all the same thing. I think this is just a different way of looking at it that can be really easy for new traders. A lot of times the some of the other versions, there's just it can just be overwhelming. I really understand how to read charts very well. People send me their charts all the time, and sometimes I'm just like,
What's on this?
what are we doing? Buying when the green leprechaun crosses the blue frog? Like I don't get it. Like what is this? Like let's draw stars on it. Like, sometimes it's just too much.
No, definitely. So like here we have like 3 key principles really: the price action, a trend line, and the Bollinger Band. And just off those 3 key principles, you're identifying the trend, you're identifying an entry point, and you're identifying a target.
Yeah. So, and also, let's show this. If you get let me think of how to draw this. These are hard for me to draw. Okay. Let's say you got a candle. Dun, dun, dun. That came saying candle draw. I don't know. I haven't seen a bar in forever, so don't mind my bars. But let's say you get a move that came like all the way down here.
Yeah.
This is not a Little Rizzy to me. Okay, it has to form on like an uptrend trend line. The second it comes like down, all the way down. If it stopped right here, okay. I could say if I look at the chart, there would be a chance. Let's say it stopped right here, and maybe I could draw the trend line right here. It could still continue on that high, but the second it comes like down below here, it's all bets are off.
Invalidated.
Yeah.
So then from here, obviously, you would class it as sort of a break of that trend potentially.
Right.
And then the next, for that pattern to form again, you would need, I guess, some green candles, and then do the same accordingly.
Right. So, and then if something came like this, this would be a downward one to me, even though we're near the bottom. So let's say this one was, just to make it simple, let's say this was the low. It would be right here to here.
Yeah.
And take it down.
So then it'll be from there to there, and then we'll be looking at the same move to the downside.
Yeah.
And then in terms of how do you then use this to try and identify the bottom in that case? Because then, as you said, if you were going to get to the out of reality, you'd still look to hold to that point.
Right. So what I would say is, like, if I was playing this Lil Rizzy right here, okay, my exit for a sell would be this move. If we said like it was, I don't know, to here, that would be my exit for a sell. The distance from the trend line to the highest high candle, and then take if that's $20, add it to the highest high, and that would be my exit for profit. Now my exit here for a loss would be if this trend line breaks. I might do it like below the low here, or I might just do it like my only hesitation with doing it like real close, like right here, is a lot of times it will come test it and then just bounce. So I very much kind of like to wait for like an actual close. Okay. Like, so if the next candle like closed below this trend line, I would get out and say, okay, this is probably breaking here. Okay. If it's just, drastically pulling a silver move like the other day, get out and kind of also always apply a max loss to all of your trades. You know, whatever, however many ticks or percentage or tenths of a percentage points you want to risk. Like you should always have like a max regardless in there too. But this is the basis of every chart. To me, when I see charts, this is all I see over and over. And if you focus on this, that concept of follow the trend, it becomes easier and you can actually kind of see it. Now, what usually happens is it doesn't just go up, down. It usually will kind of trade sideways. And so like, let's say the chart is going up. When it reaches kind of like a top out point, it usually kind of trades sideways. But what you will see in that when it's trading sideways is it's not forming any more little Rizzies. It's just kind of going sideways. So that's kind of your thought process of, oh, this uptrend, it might be over now. The next little Rizzy that forms might be down. I hope you don't mind that we name this after you.
That's okay. I'll take it. Yeah, it's fine. Continue my legacy somehow.
Okay. Yeah.
It's okay. So from here, what should we do? Should we go to the chart examples from here?
Yeah, let's go to the chart.
Okay, perfect. Futures traders, it's time to hear about Apex Trader Funding, the largest futures firm in the industry. They have completely changed the game with their new evaluations. So far, they've already paid out over $600 million to traders around the world, just like me and you. Now, not only that, Apex actually holds the record for the largest payout to traders, which is of course with JCap, no stranger to chart fanatics, with $2.5 million in a single payout. And the person before that was Trader Kane with $2 million in payouts. Now, what sets Apex apart? Apex, you can get up to 20 accounts, which no other firm offers. Now, not only that, they have extremely clear rules. With their revamp, there's no MAE rule, no 5-to-1 risk to reward rule, no hidden rules, no gray areas, clearly defined drawdown models. So you have two options now: end of day drawdown and intraday trailing drawdown, which means no payout denials, no payout reviews, no discretionary decisions, and no surprises. What sets them apart as well? 100% payout split on sim funded accounts, which means 100% of the profits you make are yours to keep. Up to 20 accounts, as I mentioned, and 1 day to pass. Now, the other thing that I love about Apex is not only can you get 20 accounts, but there's different account sizes. So from 25K all the way up to $300,000 accounts. So you can get 20 of any of the account sizes that you choose. Not only that, you have various trading platforms from Wealth Charts to Tradeovate to Rhythmic. The choice is yours. So make sure you use the code CF to get up to 90% off on evaluations right now using the link in the description below. Trader Apex today. Let's get back to the episode.
Okay. This is the S&P. This is a monthly chart on this is the 1929 crash.
Okay, got you.
And what you see right here, to me, this is a little Rizzy, right? This is 1929. So I'm going to draw a trend line like this. And if you measure from here, so let's say that's like 30. I'm going to pull out my calculator.
Oh, they have it here.
Oh, okay. See, I
See,
don't
this is
know
why-
trading view.
This is why
This is
trading
why-
view is better.
This is why we need you.
But we can measure from here to here.
Disclosure, I'm just learning trading
So it'll
view.
be like a 1300 thing.
Okay.
Let me measure another one from where would it be?
So then
Below
take
here.
this distance to here.
Yeah, okay.
Do you get what I'm saying?
100%, yeah. It's this tool instead we'll use. 'Cause
Teamwork makes the dream work.
That's it. So it wasn't.
So take this candle where the low is, and then like the trend line
Yeah, my bad.
above it.
My bad. I was getting ahead of myself. Let's use this here.
Oh, do I not have that? Oh, I do.
To that. And so we have So then we need to do the same down, which would be 116, 169, which is right there. There we go.
Okay. So this is 1929, a monthly chart, S&P. Right here, I would consider this a little rizzy. You form a trend line down, you measure the distance from the lowest low, which is right here, up to the trend line, which we brought down here, and you take that distance and you subtract it from the lowest low, and look what it gave you. It gave you the bottom of the crash. So what I would do is you could come in and just buy here, right? What I usually find is if you do it, you're usually a little early because when there's a big crash, it takes time to bottom. So one thing you could do is that, or you could wait until these are, again, our Bollinger Bands. Another strategy I like to do is you wait until you get a candle that closes above reality, and you could do an entry here, like on this candle.
Yeah.
So I find either one of those are good entry points, but I mean, this is 1929 and it gave you the exact bottom. Pretty much. I mean, not exact, but pretty
It's
close.
very
So
close,
that's why I say it's really good for finding entries. Now, these are also other examples along the way of other ones forming. Like right here, right here, right here, right here, right here. So when I say that they start giving you, they make it easy for you to see the trend is continuing. Now, I want to be clear. I'm not going to, even though in this crash, you probably could just take this trend line all the way down. This is not how I look at it. I look at it very much as an individual pattern with the individual trend line. So this would be 1. On this particular little Rizzy, the low was on the first candle. I would measure here to here, and you will find it brings you down here. Now I have another one. I would draw a trend line from like here to here. And my next move down is going to be the same thing. Measure the distance from here to the low, and it's going to bring you down. And it continues. I would consider this one. I could consider this one. In this instance, we had a lot. And let's say you tried to do it here and it failed. And for me, the trend is broken there. Now, a lot of people would just do one trend line all the way down, which you can do, but this gives you like the exact moves down in a way to measure it when you kind of break them up.
But in terms of the only question I can think the audience having is in regards to, and it's slightly different because we're on a monthly chart, so maybe we can sort of clear this as we go to more recent charts.
Okay.
But in regards to the trend line, so as of right now, you know, it's much, the thing that they'll probably be thinking is it's easier to do this on charts that I've already sort of presented all the candles to be able to do it, right? So in this case, this one here, let's say, drawing the trend line is more simple because we can see where the next higher low is or the next candle that then sends us lower. But then in real time, how would we be able to
So I would
trust picking
say,
this?
like this next trend line, right? I wouldn't have drawn it until like you have this candle.
Okay.
And you're right. I may not have seen it at that point. I may have not realized it until 3 candles down,
Okay.
and maybe I missed that one.
Okay.
So it is something you have to learn and practice in real time. And when we go over the current Bitcoin chart and my favorite chart that I think is like a really good buying opportunity for the future, those are not completed, right? Those are real-time
so we
charts.
have-
So I'll kind
yeah,
of show
gotcha,
you when I don't have the data, like what I look for
Gotcha.
and
yeah,
how
perfect,
I
yeah.
come up with those conclusions. So let's go to the .com crash. Let me go. Let's look at a week. Oops. Let's do a weekly. Oh, I kind of had these drawn. Okay. This is 2000. the NASDAQ. This is a weekly chart. This, to me, is one big, in my mind, this is one big little Rizzy. I would draw the trend line like this. And the distance, or I would measure the distance from here to the trend line, take that, and it will bring you, it'll be around down here. And you can see in the .com crash, this would have been an early buy. But it's still, if you're trying to do if it's a market crash and you're looking for a long-term entry point, it's a good basis for where you should enter. And the other thing too is, like, you really want to focus, if you're trying to gauge if there is a crash, you really want to gauge the fundamentals and ask yourself, is GDP declining, is unemployment rising? You want to look at those types of things also.
But no, you're right. So especially on this sort of bigger picture way of trading, the fundamental side of things are going to be really helpful and necessary to a degree, no doubt.
And these are again, I'm just going to draw these just so you get in the habit of seeing it, because in my brain they repeat over and over. I would consider this one.
Is this why you were saying on the Words of Wisdom episode, like, you cannot match or replace the time on the chart?
Yeah, because the more you do this, the more that you'll start to see them. Like, you could consider this one, and you could say, okay, this is still telling me it could fall. It did kind of bounce above, but this is how I gauge the direction of the price movement.
Are there other elements when it comes to, so say, for example, here, we're on the weekly time frame, we've identified the trend line, we've identified where we're positioned, our direction. But then when it comes to sort of trying to enter, then manage the trade, let's take this as an example here. Would you then be basing it, this is weekly, would you go like daily, look at what's going on there to help then back up your thesis and find that entry point?
Yeah, and you'll see more and more of these repeating in every time frame, in every chart. So you can definitely zoom in, but I do find that, again, so like up here, this is towards the top of the Bollinger Band. Even they still continued down like this one right here is towards the lower band down here. Yeah. But it did kind of consolidate, reality, go sideways, and then it made another move down. If you go to 08, let's see, past it. Okay, wait, how do we do this?
Would you say that when it comes to the news side of things, especially if we're at highs, do you sometimes have to kind of think counter to what the news is saying, for example? So what example can I give? Like the dollar, I guess, this last week, 2 weeks, everyone's talking about how the dollar's died and it's just dying off and dying off, dying off. Does that, and it has died off, but does that then, when it comes to fundamentals and looking from this perspective, because it's at like record lows already, is it almost to a degree, sometimes you got to think the opposite? Okay, we've probably priced in this negativity at this point. This could be where we start to turn.
I have a great tool I like to use for that. And I say, when mainstream media is reporting it, like when it is headline news on CNN, it's priced in. Whatever it is, it's priced in. Now, if it's on CNBC or like Bloomberg or MarketWatch, it might not be priced in yet. But like, if we wake up Monday and it is headline news about a silver crash on CNN, MSNBC, like Fox News, like the regular news stations, not like the business,
the finance ones, yeah.
When it hits those, like headline news, it's over. That's literally what I look for. I look for that, or I look for my friends calling me who don't normally trade, who tell me about it. So if I get calls Monday about silver from people who don't trade, I'll be like, it's probably over. But I mean, those are the things that I look for. And we do have to remember the market is always pricing everything in advance. Yeah. It's way ahead. As much as we like to think that we can get in before it, we can't. But when it hits the mainstream news, that's always my cue. Yeah. Like, it's over.
I've had a lot of people. I know a lot of people who have been trying to ask me about silver more recently, people who don't trade.
Mm-hmm.
So that was always my indication that we were going to see something as well.
This is NDX, so in the NASDAQ, this is the 2008 crash. And if you measure the distance from here to here,
Yep. So we measure from here to here. So that gives us 41.
and so that could be an entry point for a long position.
Mm-hmm.
Again, it's not exact. This is an example down here where it started trading sideways.
Yeah.
And you can tell the trend started changing. So if you were coming in 08 and you're trying to identify the bottom, you got an inheritance, you came up on some money, and you want to enter the market, right? This would give you a good position to enter. You could do it here, or you could wait until you get a candle breaking the middle Bollinger Band, and you can see it went on from here. And again, now we're in an uptrend. To me, I'm just going to go through and draw them so you can see how in my brain I look at these and I try to pick the direction of the trend. So this, to me, this would be one. The high would actually probably be on this candle, and I would measure that distance. It did go on above that, right?
Mm-hmm.
So from here to here, I would consider this one. And if you measure the high to here, you can see it continued up.
And then from there we continue. Let me sort this for you. That one.
This would be a little rizzy to me. This would be one. This one I probably might not have, because this low came down pretty far.
You adjust.
But it just keeps it. I break it down into this repeating pattern over and over and over. And when I get a moment when it starts to trade sideways like this, I kind of go, maybe it's breaking. Let's go into, let's do 2018. In 2018, we had there was a big drop in 2018. And it's kind of one little rizzy that kind of gave you the, is this how you're doing it?
Yeah.
Okay, I'm learning Trading View, guys.
You usually use Thinkorswim. You said.
I use Thinkorswim, so I feel like I'm kind of writing with my left hand and I'm right-handed, but
It's okay.
we get the point. And it is like a perfect.
Framework just under that.
Yeah, it's close. Same thing going up. They continue to form. Now, let's go into 2020, the COVID crash. Where are we? 2022. To me, this is your, if you are an investor in the market and you see one of these patterns starting to form, and there's some fundamental going on, like COVID, we all knew it was spreading, and you see this huge drop followed by a bounce, you're seeing maybe you could draw the trend line and it's starting to fail. That's kind of your time that maybe you are wanting to realize it's probably going to continue down, and you can see this continued to drop down. I would consider this another one from here to here. I would consider this one from here to here. I would consider this one. I would consider this one. And again, it stops. And now you get them in reverse. Now you're getting them from here to here. So it's going to move the distance from here to this trend line, and that's going to be your next move up. And again, that's how I'm gauging the trend. If we go into, let's go to do April.
Let's take a break for a minute there, guys, because I want to tell you about our incredible sponsor in the CFD prop firm space, the one, the only, the best of its kind, Alpha Capital. Alpha Capital is unique when it comes to what they offer in the prop firm industry. Only through Alpha Capital can you actually have a path to professional trading. So you have the opportunity to trade in person from a trading floor in the heart of London. You will have a salary and trade alongside industry professionals and can have a career as a trader. So this opportunity is for everyone. Now, if you pass your challenges, you get funded, show consistency. Not only will you be transitioned to live, but now you can have a salary and trade in a professional environment with all the professional tools necessary to elevate you as a trader. And look at all of the payouts that Alpha has managed to achieve in such a short space of time to traders just like me and you across the world. Now at Alpha Capital, you have all the best trading platforms available, from MetaTrader 5 to also CTrader, TradeLocker, and most of all, coming soon, Alpha Trader. Alpha Group is the only prop firm in the industry that has created a full ecosystem for your trading all in one place. All this and more only available at Alpha Capital, which, by the way, the links are in the description below. And make sure you use the code CF at checkout to get the best discount possible anywhere else in the industry. And the offer's on screen right now because we like to change that up. Sometimes we get some bespoke ones for you, whether it's a 1-step, 2-step, or 3-step challenge. The options are all there. Links in the description below. Now let's get back to the episode.
April 2025. If you make this one large one and you measure the distance, it came pretty close to giving you the bottom down here too. Maybe you're going to enter right around here. And then you got a huge one form right here.
So when you get down there, one, you're taking profits from any shorts. But then when you get to that level, based on, you see the overall correction, probably some fundamentals as well as them being out of reality on that lower Bollinger Band. Do you start looking at buying and trying to time like the absolute bottom, or you want to wait for confirmation for you?
So if you look at, like in this instance, this little Rizzy brought us down to right about here. We also had a fib retracement here for the AI bull market that started in 2022. Somewhere around here where this little Rizzy bottomed was also a 50% Fibonacci retracement from the whole AI bull run. Mm-hmm. So when that happened, I was like, oh, it's over. It's going to reverse. And that's why I had posted in X. I was like, the bottom's in. That was it. Because it was just too much support. It was too powerful. We dropped too fast, too hard. And it just seemed like it was over. Mm-hmm. You could come in and say, hey, this could have been one, right? Mm-hmm. And this would be a time where if you consider this one, it did not work. It was invalidated. So what you would want to watch for is it starting to form one in the inverse direction to do an uptrend higher. And again, I'm going to show you two charts in real time that are forming them and which direction I think they're going to go.
Definitely.
But it's over and over the same concept. And it's how I gauge the trend over and over. Like you could say, this is one. Mm-hmm. And then.
This is why it really comes down to people putting in the chart time and the work, because based on your perception, you might go a shorter one based on a couple of candles coming down, or you might feel, better doing sort of the longer period, the whole sort of cycle of that. And that's where, putting in that chart time over time, you'll develop the eye that you see for identifying the highs and lows based on what you see. And that's going to be so important, right? Because regardless, unless you see it for yourself and you feel that confidence to a degree in terms of like what you're seeing, that's the only way you're going to be able to execute properly.
Yeah. Yes. Nothing. There's no YouTube video. There's nothing that anyone can teach you that will beat just the time you invest staring at the charts and just kind of like learning how they breathe. Okay. This is Bitcoin. This is a current chart. Now, what I would say is I would either do it like this or let's say like that. Okay. I would say this is one that's forming. So if we measure the distance, so that's
6,100.
61. No, 30,000, right?
In dollars, yeah. 30,000.
Okay, 30,000. So the low here is like right around here. If this continues to form, I mean, Bitcoin's coming down. Let's see. We're saying 111, let's say, to, let's just say 80. It's going to, so if this continues to form, it's going to drop it. It's going to drop to the 50s.
So that's the direct bottom, and that is the high, 30,300, and then we do it again. It's around the 50,000.
So there you go. That is one in real time that has not completed. And if it continues that pattern, that's where it's going. 50,000. Which is a long way off.
It is a long way off. It'll scare a lot of people, no doubt, especially a lot of the crypto scene. So in this case, then, you mark it out, and let's say if you wanted to execute on this, would you then be going lower time frames in order to execute and enter?
No, if I wanted to play this actual move, I would just short it until here. Now, mind you, shorting that many points on a long-term chart is not in my trading strategy, but we'll go into some like shorter time frames and show you like times that you could do it. So if we're looking at Bitcoin, I'm bearish. I see a little risky. It looks like it's going to come under 60,000 to me. That's what I see. And let me go to a monthly chart. Yeah, look at, it's going to bring you. Yeah, it doesn't look good. I'm sorry. Don't play the messenger.
I don't mind. I'm not in Bitcoin.
And then let's go to, ooh, that's not right. What did I? On Thursday. So this is the actual play I posted in live time on X that you could go back and reference. When it got like down here, I had said that I thought it was going to reverse. And part of the reason I saw that is I kind of saw this, I saw this one kind of form here, or maybe I could have drawn it like that. And it was way, the market, the NASDAQ was down over 2% at that point. And you have to kind of say to yourself, this is probably the low. The market doesn't often statistically fall 3%.
Yes.
So we're probably going to get a bounce here. And we had like this little Rizzy completed. We still dropped the distance from here to here. We came down here. Then we had a little sideways trade. And we formed one going up. And so I used these, and I had gauged that at some point down here, I kind of saw this forming, and I was saying, hey, you know what? The next stop's going to be around 25,900. And we ended up hitting 25,900. And that's how I was able to make that call. Again, I saw this last little Rizzy form. I saw how far it dropped. I knew that the market was down over 2%, and it doesn't statistically happen that much. We're at the lower end of the Bollinger Band. I see the trend start to change, and I was able to gauge that it was probably going to run to about 25,900 on a bounce. And the other thing I did was I kind of took this, the bottom of this little Rizzy, and I did, this is a separate something. I drew this before I had any of these candles.
Yeah.
I kind of drew out a trend line from these, and I asked myself, okay, if we're going to bounce, it made sense to me that it would probably try to come up and hit this, which was right around 25,900 in at what which was what I was thinking at the time. But you can see how the trend changes. Do you have any questions?
No, I can understand it. I can see it as well. So if we were to measure it from, it would be what, this low here to there. And that would give you 147. And then from down here to 147 would be roughly just there. And there you have, oh, I used the wrong one, which is fine. But you saw, yeah, fades out or low. And that's why it's so important to always have context. I think a lot of people assume, oh, okay, here are the rules, and that's it. When in reality, it's like aligning your rules, because you could have your rules present itself, but then you're in a poor position in the market, but you're just ticking boxes.
Yeah.
Right?
And so I would say to traders, because I know everyone has their own trading strategy, but we all need to identify trends when they're in place, when they're changing, when they're turning. It's just something they can add to what they're already doing to kind of see if it aligns to the trade they're going to play. Yeah. You know, if they're coming in here and you're wanting to go short, if you're coming in right here and you're wanting to go short, but this little Rizzy already bottomed out, you're getting close to being out of reality on the Bollinger Band. This is not a good time to go short.
Yeah.
This is a good time to go in for a bounce to go long. And I mean, you can see how the price usually trades within the bands. But again, for Bitcoin, I don't see, I see it going down towards, do we do this right? Is this?
That's the market cap.
Hold on, there we go. Is that? No, I'm clicking on the wrong one. Here we go. I see it going down under 60,000 to near 50,000. And it looks to me as in that's one that would complete. So like I would not be going long Bitcoin right now.
Let's take a break for a minute there, guys, because I want to tell you about our incredible sponsor, TradeZella. TradeZella is the #1 trading tool in the entire trading industry. TradeZella allows you to become a more profitable trader, allows you to make immense progress as a trader, no matter if you're a beginner or an advanced level trader, because it makes journaling easy. It makes journaling something that is fun and enjoyable and something that is interactive. So no matter if you're a crypto trader, no matter if you're a futures trader, no matter if you're a Forex trader, no matter if you're a stock trader, all you have to do is select your broker, your platform of choice, and connect it to TradeZella, and it will automatically sync your trades and pull all of that data onto the dashboard, making journaling and finding your edge and adapting your edge so easy. In collaboration with TradeZella and Chart Fanatics specifically, we are actually getting the playbooks from the episodes that we're filming with these incredible verified traders and adding them as playbooks onto TradeZella, so you can actually go on there and see the rule sets already predefined. So make sure you check that out as well. Now you can actually get 10% off your monthly subscription using CF10 on TradeZella right now. But more importantly, I would say CF20 for 20% off your yearly subscription with TradeZella. The links for TradeZella are in the description below, so make sure you go check them out. Use CF20, get 20% off your yearly subscription, become a better trader today. Now let's get back to the episode.
Okay, now for my, so this is my short play in real time, okay? Now for my long play in real time, it's HHH, Howard Hughes.
Interesting.
This is
Is this an airline?
No, it's a holding company. So we all know Warren Buffett stepping away, has stepped away from Berkshire. Howard Hughes Holdings, in my belief and from what they're trying to do, they're trying to step in to be the next Berkshire. Now, they were They were initially like a real estate company, but they've got a $1 billion investment and they have been restructured.
Okay.
And they're now turning into like a holdings company. And this is all stuff that's currently happening like the past year. A big part of this is combining the chart with the fundamentals, right? So we have Howard Hughes Holdings being restructured, and it's not just going to primarily be a real estate company anymore. They're going to actually invest and become the primary stakeholder in other businesses, and they're going to have an insurance-driven model also, which is what Warren Buffett did through Berkshire. So they're trying to literally copy his steps.
Yeah.
And I think this is what's going to take over as the next Berkshire Hathaway in our generation. And if you invested in Berkshire Hathaway in the beginning, you would have made like 5 million%. Obviously, that was like the 1960s or something. But I think the chart combined with the shift in the company and the fundamentals, it makes sense to me. Now, what I see when I look at this is I see one that formed right here that has not finished yet. This is sort of a lower one. So if you measure the distance from here to here, okay, Riz, come on. Add the next one. I'll figure it out one day.
That's
how to
okay.
use TradingView.
So good. 66 will put us up here somewhere.
So it's almost or it is probably a double if this finishes. Let's see.
It'll be just under that, but yeah.
So it's currently
Over-
around 81.
Over
And
a
if
double, yeah.
yeah, if this finishes, it's going up towards 175. And I see it finishing. And when you combine this little Rizzy and you see how far it's going to go for this one to finish, this is a monthly chart on Howard Hughes Holdings. You combine it with the fundamentals, you see this, you also like realize like a lot of these people that are going to be taking, I don't want to say they're going to take their money out of Berkshire, but they're going to be looking for the next one. They may find their eyes on this, and they may start investing, and then they also have that $1 billion that they're going out there to invest in other companies. They'll basically be like they'll use like their cash flow from the real estate investments and the new money that got invested. They'll use that to buy these other businesses. They actually become like primary stakeholders. It's not like a hedge fund when they come in and buy and they take like a minority stake of companies. Like they're going to run these companies, and that's what Warren Buffett did. Dairy Queen. So it all makes sense because the whole business model for the company is changing, and the structure and the new investments, and then Warren Buffett stepping away, Howard Hughes Holding possibly coming in to take over its place. It makes sense why you could get this move up so high that it's basically more than a double from here. And I think it could happen fast. I really do. So this is my favorite bullish chart right now that I can find. And again, I'm showing you one in like real time, how I would view it and how I would price it out.
So in terms of then, this one in particular might be something which you might invest long term in, for example.
Yes.
If it was a trade, like the 5-minute chart we were looking at on the NASDAQ, how would you go about sort of entering that trade, or how would you go about looking at that?
Let me pull it. Let's see how this one looks on a 5-minute. So right here is, they're contradicting, right? You actually have two in play right here. You have this one. This is the hourly chart, which would push you, up
Above
here.
the previous high, yeah.
Oops. Or you could also argue you have this one that could bring you down here. So what I would do, like in this scenario, if something like this comes up, I would wait for one of these to break and I might enter. So if this starts trading sideways right here and goes up, that would tell me this little Risley is probably the one in play. If this continues to go down and break this and come down lower than this trend line, like maybe down here, I'd be like, okay, this one is probably the one in play.
So where do you like place stops in that scenario? Is it above the trend line high or just above the most recent high?
So in this case, let's say I didn't care about this other one that could be forming and I wanted to just play this one long. I think it's going to continue and I wanted to play this one long.
Yeah.
I would probably put a stop. Okay, let's say we're saying like this. We're thinking this is one that's forming, so we're thinking it's going to come down. I would probably place a stop like right above the high of this candle, like right here.
Okay.
Like maybe I don't exactly like to use the exact high of the candle,
Get some
but I
room.
do it like right here in that trend line broke. And I would play it for this to complete down here. Now, you do want to always make sure that wherever you're putting your stop, that the distance from where the price is at to where your stop is at, I believe should be less than or equal to the profit you would take if it dropped in this pattern completed. I would never want to put my stop so it would be higher than whatever the profit I could make. And that's kind of like personal preference.
Of course. Yeah.
If people want to do like
Do you have
2
like
to
a
1,
minimum
1 to 1.
threshold that you would look for?
No, I wouldn't say like I have like a minimum threshold, but I would say I prefer not to play the ones down here after we've had this move. I prefer for there to be like an uptrend and try to come in and play like this one.
Gotcha.
So like the first one after an uptrend, the second one after an uptrend. Probably when these start forming down here, I probably wouldn't have taken them. But like, so this one would not be one of my favorites to take because it's
position.
already down so far.
So in this case, you might have taken, say, from here to here.
That would have been one that
would it be a
interest
case
me.
where, in terms of entry-wise, you'd want this to close, and when you see this, close below the sort of mid-range of the Bollinger, alongside where you're positioned in the market, you'd enter. So we can actually put on the short tool here. So say you enter, and then in this case, your stop loss probably be not directly on the high, just slightly above.
Right.
And then measuring low to high here.
Yes.
This would probably put us at, well, that would put us here, which would be 3. So maybe something roughly, without marking on it, would be something like that. Would that be kind of what you're going for?
Yes.
And then would it be similar on the next one? So if we just mark out one more, it would be a case where it's like here to, well, not there, sorry.
You see the little
getting
rizzies.
yeah,
You get it.
It's in my DNA now. That's still.
Literally.
So high down to low, and then same thing. So maybe with this one, it might be slightly different because of where the candle's closed, right? It might close down here. So maybe you might be getting in a bit of a lesser entry point, like not as precise as you may like it, but regardless. But the low to high in this case is still pretty substantial. Let's mark it out for accuracy. So below to the
And you're not
point.
going to catch them all.
Of course,
But the more that you try to do this and the more time you spend staring at charts, the better you get at it and the easier they are to catch.
515 will be roughly there, which would put us like something like this, right?
Yes.
So then there'd still be an over 2 to 1 in that instance. Yeah. So really it comes down to where we're positioned in the market.
Yes.
So you don't, regardless of the rules, if we're at a low point, a bit more reluctant to sell at that point, right? Rather prefer a buy to start form. Same with, if we're at highs, that's not really we want to be buying, regardless of whether they're presenting there. We want to be selling. So is that where, does an element for you, as you mentioned, it's quite fractal, this, and how it sets up, like it doesn't matter about the time frame. So say if you identified on the daily a bullish little Rizzy, it's a bit weird if I say, right? But a bullish one, but then price is already at a high on that day, you might be waiting sort of to align with price coming towards the low of that daily pattern, but presents a bullish on the lower time frame for you to then look to execute. Yeah.
Yes. And
so do you layer the time frames in a way if you are short term versus longer term?
Yes. And, one of the things that you'll also start noticing is, we're on 5 minutes. Okay. I'm probably going to drop it down to a 1 minute to show you because I've stared at these for so long. to anyone else, this might just look like sideways candles, but to me, if I lower the time frame, I'm going to see a little reason more clearly. If I lower this time frame, even though this is like sideways candles, I'm going to see that that was probably one forming. And so this is like, and what time are we at? So we remember Friday, 1905. Let's see.
Does the time of day at all impact your decision to trade, or any time of day?
I hate the open.
Really?
I hate it. Do you trade the open?
I don't know.
Wait, let me say this. I hate the New York session open.
Mm-hmm.
I like the London open. I like all the other opens. And
Just not New York. It's too volatile.
I stay out of I stay out of New York's open. But there's seasonality within the day, and I would highly suggest everyone study it. It will really blow your mind. There's certain hours of the day that are net negative historically over hundreds of years. Well, not 100, let's say like 50 years, because the studies I've seen, most of them have gone back about 50 years. And one of the things you will find is that like the New York session is usually net negative, and the rest of the time is net positive, which is kind of interesting. There was actually a study done in 2008, and it said during the 2008 crash, if you had just like bought the New York open and sold the New York close, like throughout the whole crash down, I don't know exactly, but it was something like you lost like 45% or something. If you had done the reverse and you had actually bought the close of the New York session and then held overnight and sold the open, you were net positive, and you made like 8% even during 2008.
That
crash.
is interesting, yeah.
So, like, I would highly suggest everyone study seasonality. It's very interesting. So that stuff really does matter. So what that would tell me is that, like, statistically, there's always a bias towards going short during the New York session.
Yeah.
Except towards the end of the day, it tends to shift. There is usually like a run towards the end of the day. So I think this is what we were just looking at the 5-minute chart, and you can kind of see. When you zoomed in from the 5-minute to the 1 minute, it was a little bit more easy to see.
Yeah.
So that's one of the things, if you're trying to learn these, when you see something like this, and you're like, hey, this might be it, zoom in and you might see it more clearly on a lower time frame. Whereas on here, it just looks kind of like it's trading sideways. And you'll eventually learn them, and it's just a really helpful way to understand the trend.
No, definitely. I think that's definitely, goes back to your point from the original podcast, is spending that time dedicated to the charts. Because, I remember going back to when I first started learning charts, and, I had just done an extensive 2-day course with people, like, learning all these concepts. But as soon as I was by myself, it all felt like gibberish. Like I couldn't see anything. Like, what was I looking at? And only through then repetition do you slowly start to build your confidence. And only at this stage, really over the last couple of years, I was spending a lot of time on lower time frames. So then, to your point, looking at something like this, you can sort of see that without even going lower, we can start to see the structure. So if I was to just look at it and try and break it down, it would be a case where we know 1 minute wise, these are all highs and lows that are taking place. And then that breaks. So we know on a 1 minute already that there's a break of structure that's taking place there. The trend changed on that lower time frame. Whether it stays there or not, we can already have that understanding. But for a new person, they won't probably know that until they do, as you said, the repetitions and get that chart time in to really train the eyes to see the market in that way. But back to your point for the whole concept and strategy we've gone through today, it's really taking all of these concepts you could learn and sort of trickling it down to 3 key components to focus on. And the amazing thing about it really is that it's fractal as well. So it's not a case where, hey, this only works on a big macro perspective. You can shrink this all the way down. But to your point as well, the nuances of practice, right? And you're not going to see the same thing as everyone else. You've really got to decipher and pick up on the traits and the patterns and the reoccurring themes that you notice through doing your back test or doing your live charting or your data collection.
Yeah.
Right?
I get a lot of messages from people that tell me they have a problem with selling too early, like they can't let winners ride, you know? I would say if you have some strategy that you follow and you're struggling with trying to let your winners ride, you might want to add this to what you're already doing because it might give you more confidence to let some of your winners ride. If you see, hey, this little Rizzy form that's in my favor, it's going to go up another 50 ticks or something, that this might be what gives you the confidence to stay in it and let it ride, because most of our money is coming from the ones that we, in my eyes, again, all the traders will contradict themselves. In my eyes, the ones that I let run are the ones that end up making all my money. So learning how to let winners run is a really important skill. And so this might give you that extra confidence you need if you see this aligns with it, to just let it go until this is done, and then you might get out and take your profit.
Definitely. And aside from what we've talked about, just to finish off, in regards to the chart time and that sort of preparation and dedication to doing so and training the eyes, is there anything when it comes to implementing this that stands out to you as something that people should be aware of, or maybe a particular struggle point that they should be aware of then when they're trying to implement or look at this?
I would say before you just walk out and start trying to do it, spend time practicing it, because you're going to make a lot of mistakes in the beginning. I'm still wrong a lot to this day with trying to identify them in real time. So practice drawing them historically and identifying them historically so you can grasp the concept, but then also spend a lot of time doing them in real time where they're not complete yet, so you can start to learn things you're missing, when you're coming in too early, when you're right, when you're wrong, and you'll just slowly get better at perfecting it. Now, I'm telling you, like the longer time frames, it's a lot easier to do. That's why I say I love this strategy for trying to find the bottom of stock market crash. If you want to enter, take a big position, or you just want to like over leverage your portfolio, those would be the moments. And I think because if you're doing on the 5-minute charts, the data's coming in fast. You have to make quick decisions. So I think sometimes learning it on the longer time frames can be easier because you can spend more time analyzing it, and you can add other things to it also, and get all of your fib retracements in there. And you can look at the fundamentals in the economy and see if they kind of align. Whereas when you're on the 5-minute charts, you don't have the time to do all that, and it's really won't be as helpful. So just practice. Don't just jump in and swim and start doing it and think you have it. Like take time practicing. And like I said in Words of Wisdom, the longer you stare at charts, they will eventually start to speak to you, and you will get it, and you will start to see it. So just take your time before you start putting money behind it.
Definitely. I love that. Well, I will apologize in advance for all the messages you'll probably get off the back of this episode, because no doubt there'll be people with questions. Drop them in the comments below. But thank you for doing this as well. Again, you turned us down before, but I think thanks to the people and their, constant, questions and ask to get you on Chart Fanatics, we have been graciously, really, really happy to have you. Really, really happy to have you. But any comments or questions, like I said, drop them in the comment section below. Let us know what you thought to this episode. Links to Marcy will be in the description below, so go check those out. Also, other episodes are on screen right now, so make sure you check them out. Actually, we have one with Anthony Crudell, who went through the Bollinger Band, so maybe that could be a good sort of connection point there. But hit subscribe, and until next time, this has been Chart Fanatics. Take care.